Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scout, and jumping into the charts on this September 12th, Monday, September 12th, kicking off the new trading week. Today it's been a positive day for the indices, as you can see on the SPX chart here, which mimics the S&P 500. Overall, we've come to this wedge pattern. You have broken out short term. Now, tomorrow sets up confirmation day. If the SPY can break out of this channel, then you likely go test this gap fill and the upper range of this parallel channel, which is what we've been chopping and trading in for quite some time. Now, obviously, what is tomorrow is the CPI reading. So everything is going to hinge on the back of that market. And right now, the markets are kind of in like this 50-50 area mode where they don't really know what they want to do. And I've been trying to look at signals from the bond market. I thought I may have had a potential signal. And mind you, we may still have a signal as we have an hour and 7 minutes left in the candle. But overall, I've been trying to find out if there's some interconnected market analysis that we can look at to give us a signal to potentially where the likeliest outcome of the CPI is going to head. Now, many expectations across all analysts are for the CPI to abate, inflation to reduce and come down. I am in that same camp. Now, I don't know whether or not inflation is going to come down enough to meet market expectations. Obviously, we'll know by tomorrow around 8:30 what the market reaction is. Generally, the first market move is the wrong one. So if we see the market start to rally up, that means the market has taken the inflation number well. But if the markets start to sell off, that means the markets have not taken inflation well. And honestly, it could go either way at this point. I do think it'll be lower than the previous inflation report, but it's just a matter of market sentiment. Does it impress investors enough? So obviously tomorrow we'll know whether this is a confirmed breakout or a failed breakout. If it is a failed breakout, the biggest moves come from failed breakouts. So if it fails, you're likely heading to the low end of this range. Gap fill down here at 37.93 and change. Also another gap fill down here at 36.75. So lots to digest tomorrow. It should be a wild session. If we take a look at the intraday market analysis, here was our gap up, had a little bit of a rally, sold off, didn't make a new lower low, but you failed to make a new high. So you're trading in a little bit of this wedge pattern on the S&P 500, and the question is, which way is this going to break up? So time will tell. If we take a look at the NASDAQ, the NDX, or the QQQ, we usually look at the QQQ, but for this video, I'll look at the NDX. NASDAQ is into this wide range red bar on the daily. You can see it's approaching the short-term moving average. So there is resistance in the near term approaching on the NASDAQ. Even if the inflation reading, the CPI, comes out positive, there's still technical resistance up ahead, which could cause the NASDAQ to hit it and pull back and consolidate the gains that it's recently had. Four up days in a row is pretty impressive, but there is tons of resistance in play. Let's take a look at oil. WTI is up on the day, up over 2.2%, recapturing this parallel channel. Before I start a short on oil, I would like to see it come up to maybe this probably this 96 area is where I'd consider starting to short oil again. But up until now, I think we've hit a pretty good level of support where it should have a more robust bounce than what we saw here, and I do think we get a little bit more follow through on the price action of oil. If we take a look at, and mind you, I'm still interested in going long oil if we get down to this 73, but up until now, you can see it did not hit our first accumulation zone, so we'll stay away. Natural gas is having another little bit of a positive day. It's still creating this bear flag. If natural gas can pull up again right to that 860 level, I will look to start accumulating another short position. I still think natural gas is overbought. It has digested some of this up move most recently, but now the question is, are we putting in some sort of a head and shoulders formation where you have a left shoulder, a head? Now, is this going to form somewhat of a right shoulder where you trigger on the neckline and then you break lower? So that's kind of what I'm watching for, and we kind of have to anticipate these patterns just based off of what the likeliest pattern formation is going to be. So let's continue to monitor the energy sector. That will give us plenty of insights. I think a big mover on the day is silver. Look at this massive move in silver. The interesting thing about silver is that despite it having an over 5% rally at the high, it's up 4.99 right now. Silver has not been mentioned in the move, despite having 1, 2, 3 powerful days in a row, followed by a boom, a beautiful surge. You are into short-term resistance. I would naturally expect silver to try to consolidate, preferably above the short-term 25-day moving average. So again, a beautiful move in silver. This is why we've been accumulating silver. This is why we've been accumulating the likes of Pan American Silver, Newmont. Let's take a look at gold. Gold has had a positive day as well, but not as powerful as silver. It's up just 0.5%. You can see gold is still lagging this 25-day moving average, as opposed to silver has now recaptured it on the daily chart. So that's just interesting to note. Typically, silver does lead gold in the latter half of the bull market. So if we're seeing that latter half in the bull market breakout in precious metals, one could suggest there's a lot of upside in both silver and gold and the miners. So that would certainly be good to see, considering we are long those specific sectors and precious metals. If we take a look at the DXY yet again, let me just erase this intraday action. Excuse my messy trend lines. So if we take a look at the DXY has had now 1, 2, 3, 4 days in a row. It is closing off of the lows substantially. You can see it hit the short-term moving average. So we must not forget that the US dollar is still in a raging bull market. And with that being said, a raging bull market in the dollar currency can have negative implications on the equity markets. And I think a lot of people are, yes, we're just having a short-term extended oversold condition that's being corrected in the dollar. This is actually a very healthy pullback in the dollar. I still think the dollar still sees new highs this year. If it continues to trade in above this 104 to 108, that is considered tightening on the global markets, and those are really the big levels to watch. Until we break this parallel channel, I have to assume there's more upside. Once we confirm and break this channel, we head down to this 104 level, which is major support. And that's not going to be a one-time level that breaks the US dollar. I still think the dollar continues its upside momentum over the coming weeks to months, just because of the overall weakness in the yen, in the euro market. So there's tons and tons of tailwinds that should be propping the dollar up in the near term. But a beautiful 4-day pullback, which is why you're seeing the metals bounce, which is why you're seeing equities continue their rally. But the big question is, if the CPI comes in worse than expected, that means yields should rise faster, and that means the dollar should continue to rise. If we take a look at the US 2-year yield, I was watching this one closely because I thought we may have had a short-term breakout. So if we flip to the 1-hour chart, let's just flip to the daily. So if we look at the daily chart on yields, this is the US 2-year. This is basically where the US federal fund rate has to be at some point in time before a pivot can come. So the US Fed fund rate is at 2.75%, and this is at 3.56%. So almost a full basis point higher, which implies that the bond market still is suggesting the Fed has at least this next rate hike of 0.75%, and then potentially at least another one of 0.25%. So today was interesting because I was watching this level closely. We were potentially confirming a short-term breakout, but we were not able to hold. Now there is 58 minutes left in this candle, so if we confirm and close above yesterday or Friday's high in the US 2-year yield, then that is a technical breakout that is confirmed in the US 2-year yield, which implies that there should be more upside, or at least the probabilities imply there should be more upside. Now if we take a look at the US 10-year yield, the US 10-year yield is also important because it comprises that long-term and short-term bond market signal. So let's take the US 10. Look at the US 10-year yield. We did make a brief new high today, but we're not able to close above the previous highs over here. Now, one has to keep in mind, we're substantially higher. We're basically making 3-month highs here on the US 10-year yield. So considering that we're making 3-year highs in rates, and when you look at, say, the SPX, where the S&P 500 is, 3 months ago, we would have to take us all the way to basically down here in the middle of June. So we're basically made those high in rates, and this is where the S&P was. So we're substantially higher in terms of where the S&P is and where rates pretty much are. So despite rates being pretty much the same level as where the S&P bottomed over here, we're trading all the way up here above 13%. So I definitely think the risk to reward certainly favors the downside, and that's certainly what we're positioned for in the short and medium term as of now. But we're very nimble, we have cash, we are able to maneuver if need be on our positions. Let's take a look at, let me just see, Bitcoin, BTC, USD. So Bitcoin is starting to recapture this trend line. Now, this is actually starting to look like potentially an interesting short opportunity. You've now had 1, 2, 3, 4, 5, 6 days of upside in a row. You're into resistance. This is a powerful rate of change move. I mean, we've rallied pretty much 21% in a very, very brief time frame. So that is substantial rally. That's some gains that you have to respect and notice. We are trading, if we flip to the weekly chart, above this, basically this 2017 high. So we have recaptured that level. That's a significant level as well. So honestly, right now, Bitcoin is looking short-term bullish and positive, but if we start to float up a little bit more in Bitcoin, I may consider executing a short trade, that's for sure. So first level, we're hitting resistance right now. The big question is, will we float up to this red line? If we float up to this red line, this 24,000 level, I will look to short. And then we obviously have major resistance up at the top of this parallel channel. So a couple different levels that we're watching and keeping in mind. But overall, I am expecting some downside action in the equity markets. And we'll just have to see what that inflation aspect comes in. We did add to our Tesla short today. So let's just discuss Tesla. So if we take a look at the Tesla chart, Tesla has come into this trend line again, pivot to pivot to pivot. You've come in on a 1, 2, 3, 4, 5 day move, so you are into resistance. That being said, Tesla still can float up to fill this gap. It still technically never did. You'll have a little bit of resistance there around 318.50. And then if for some reason you get through that, you'll have more resistance up here around the 330 level. And then obviously this downsloping trend line. But it'll be a bit of a stretch to get up to this downsloping trend line. I do think there is the possibility of getting up to here and up to here. But again, we're going to need, if it comes into a straight shot, that would be an excellent opportunity to accumulate yet again more of a short trade on Tesla. Another powerhouse today, which was propping up the markets, was Apple. If we take a look at Apple, Apple has had a significant bounce now after today's rally. It was lagging the markets over the last few sessions, but clearly today it's caught up and basically rallied almost up 4% on the day. A little bit of action in the post-market, but you can clearly see the resistance that Apple has hit. This is a beautiful technical picture. Downsloping trend line, pivot to pivot to pivot, gap fill, 2 factors, and you almost tagged your short-term day moving average. So a beautiful, beautiful level there. In the event that Apple gets a little bit more upside, maybe to test and try to close above this short-term moving average, I will look to accumulate more of our short trade on Apple. I still think Apple will head to the low end of this range around 140 at the minimum, and I think we'll see that basically in the next 1 to 2 months. Overall, let's continue to watch the charts and see how that inflation data affects the markets tomorrow. Again, no real signs from the bond markets looking like we're not technically confirming a breakout in yields, which is okay, but we still have to be aware that yields are substantially higher, so we just have to keep that in mind. And the interesting thing is that we did see weakness in the ITB, the home construction. Despite it finishing positive on the day, it was way off the highs, so we'll just have to monitor and see, things like the ITB home construction, when they have a big rally and then they fail off the highs, we have to observe those and take notice. If we look at utilities, utilities usually are a forward-looking indicator for the markets. Utilities have rallied substantially. You are at resistance once again. You can push a little bit higher to tag this parallel channel, that is what we've been trading in for quite some time. So if we flip to the weekly chart, you can see this parallel channel has kept us in check for a long time, since 2007 highs, 2009 lows. And the question is, will we start to pull back in utilities? Generally, utilities rallying signify a near-term top in the markets as money move out of risk assets into the defensive sector. So that's kind of what I'm expecting. Here we saw utilities pull back along with the SPY pulling back. So utilities can be used as a forward-looking indicator, and if that inflation number comes in hot, it might affect utilities to the upside, where utilities catch a little bit of a bid, considering it's things that people need and not what they want. So let's continue to watch these sectors, different sectors, to try to give us insights on the most likely outcome. That being said, hope everybody enjoyed this video. Please give a big like down below or a comment, and we'll see you for the inflation reading tomorrow, along with a bunch of economic European data that's starting to leak out come Tuesday, Wednesday, Thursday, and Friday. So big week ahead of us. Tomorrow will shape up. Pretty much tomorrow is the market moving data, probably the most important piece. So let's continue to monitor